Hi, and welcome to this week's look at the major news stories that have been affecting the market so far. And this week we're going to take a look at the Nasdaq 100, or the US Tech 100 as we call it, and what's been happening there since the start of the week. We're going to tie that in with a second story on NVIDIA, who had their earnings report out, and they sort of correlate quite nicely with what's going on with the Nasdaq. We'll then take a look at the euro against the dollar, reaction to the FOMC minutes, and we'll finish off with gold, which had a big start to the week this week. Let's take a look at the Nasdaq 100, or the US Tech 100 as we call it, and it has reached a record high. Monday saw the US Tech 100, or the Nasdaq, reach an all-time high, closing at 18,684.2. That was fueled by renewed enthusiasm for tech stocks and talk about Fed cuts as ever. In fact, Wednesday's close was circa around the 18,705 level. That was mainly in anticipation of the NVIDIA earnings report, which was published post-market on Wednesday evening. Expectations running very high. Obviously, NVIDIA, sort of the dominant force in chips for AI. Those expectations have driven up share prices across the board, contributing to the new record that we saw, and really just backing NVIDIA's dominance in the AI space and thus, other big tech stocks. There has also been speculation about Fed rate cuts, and that's despite the Fed sort of reluctance to confirm anything, really. Investors seem to be pricing in a rate cut in the very near future. Obviously, a lower interest rate reduces borrowing costs for the firms, stimulates economic growth, and could well drive consumer demand for tech products and services. Obviously, a fill-up for the Nasdaq 100. Morning of the 23rd of May, futures are actually up further, suggesting a possible positive start to the afternoon session. But is there volatility ahead? Well, the Fed is yet to signal a rate cut, and in fact, we'll come on to shortly, the FOMC minutes may well not support, this short-term cut. The NVIDIA earnings may well not live up to the hype, although we are going to cover those in just a second. A tech rally could be susceptible to volatility. Shifts in the sentiment, any disappointing results could well trigger a reversal. In fact, the interplay between the tech earnings, monetary policy and market sentiment needs to be watched very, very carefully over the coming days and weeks. Could well be some volatility out there, so do not forget your risk management techniques. But certainly a good start to the week for the Nasdaq 100. Okay, secondly, we were actually going to take a look at that earnings report from NVIDIA, and it was pretty positive. NVIDIA exceeds $1,000 per share, first time ever after their earnings report. I say it's the first time the share price has reached four figures, and in fact the market capitalization passed 2.5 trillion US dollars. That makes them the third globally after Microsoft and Apple. The figures were positive. EPS, earnings per share, the actual figure was $6.12 per share against an expectation of $5.60. Gross revenue was $26.04 billion US dollars against an expectation of $24.59 billion. NVIDIA also announced a 10-for-1 stock split following the release of the earnings report. The idea with that is to make it more accessible to investors and support the stock price in the future. Well, post results, which I say came after market, the price was up circa 6% after hours. The official market close was at $949.50. At the moment, on the morning of Thursday, the 23rd of May, pre-market price would indicate circa, $1,010 per share. That would be up over 100% since the start of this year alone. At the back end of March, we noted that there was signs of weakness relative to the S&P 500 for NVIDIA. There was an ascending blue channel, but there was a possibility of a pullback to around that $800 per share level. Well, take a look at the chart, and that shows us the price did indeed just fall below $800 on April the 19th. However, the bulls attempted to resume the upward trend quite quickly, and to be fair, it seems to have worked. The daily chart is now showing us that the price is within the ascending channel, and the price is breaking through the $960 level, previously a little bit of resistance, with a bullish gap, and that is now expected to act as support. Now, if the bullish momentum from this earnings report continues, as it did previously back on February the 22nd, we could well approach the median line of that ascending channel. According to TipRanks, who obviously sort of combine and correlate a lot of analyst predictions, the average analyst target price for this year is $1,104 per share. Well, we're sort of, moving in that direction for sure. But that may well be raised after the strong forecast for the next quarter from NVIDIA. So, good set of very positive results. Hinted that, I think you may have guessed they were pretty positive, as we've seen the Nasdaq futures up on the morning of Thursday the 23rd as well. But again, keep your eyes and your ears open to all that information in the market. So further news Wednesday night, we had the release of the FOMC minutes, and the euro against the US dollar price seems to have formed a bullish reversal amid that news. So I'd say the minutes were released on Wednesday evening. No major surprises according to most analysts. However, higher inflation seems to be persisting. There was also some hints that some FOMC individuals had discussed potential rate hikes for the future. So the FOMC displaying a bit of a hawkish stance. Now the dollar index initially rose but returned to pre-release levels Thursday morning. So was that initial reaction incorrect? Subsequently, we have seen PMI data for key European economies released. If we take a quick look at those, the flash manufacturing PMI in France came in actual 46.7 against an expectation of 45.8, and in Germany came in at 45.4 against an expectation of 43.4. Top of that, flash services PMI in France came in at 49.4. They were expected slightly higher at 51.8, but Germany overperformed. They came in actual at 53.9 against an expectation of 53.5. So overall, they exceeded expectations, giving the euro a bit of a bullish push. Now, the combined effect of that euro push and a dollar decline since sort of midnight on Wednesday created a 4-hour euro-dollar chart candle with a long lower tail. Now you can see that on the chart indicated by the arrow, suggesting demand is greater than supply. A subsequent bullish candle could well confirm that. Again, taking a look at the chart and using some technical analysis, that shows us that the price is within the ascending channel still. 1.081 level served as resistance from sort of the 1st to the 13th of May, but following the breakout on the 14th of May, now is showing signs of support. That level is also reinforced by the lower boundary of the ascending channel that you can see, and the fundamental news in terms of PMI that we've just had. So that's the bulls may well attempt to resume that upwards trend. Could see some resistance at the 1.08750 level. That's from April. That could be sort of the key target area for the bulls. But first off, they've got to test the former support at 1.08466. So good PMI from Europe, bit of a hawkish stance from the FOMC, weakness in the dollar, some support for the euro, but again, it's going to be volatile, so don't forget your risk management techniques. Okay, we're going to finish off this week with a look at gold, and we've already mentioned, historic highs on the Nasdaq 100, for example. Well, it was a new high, record high for gold this week. At the start of the week, the price of gold rose quite significantly, predominantly off the back of the news of the helicopter crash involving the Iranian president, foreign minister and others. Now, obviously the news has since come out. The search created some uncertainty. The news has come out that unfortunately they all perished, but the uncertainty continued about the overall situation in Iran off the back of that and drove the gold rally. Well, Monday saw the price of gold at its peak of the day reach circa $2,450 per troy ounce, an all-time high. Back on the 16th of April, we said that $2,400 could become significant resistance, after which the price fell back to $2,380 an ounce. So Monday was effectively the second attempt at that 2,400 resistance level. And with that geopolitical uncertainty and fear in the market, obviously it went through that. Now, if we take a look at the chart and apply some technical analysis, the long-term ascending channel that is seen in blue is still relevant, and the price is near the upper boundary of that. The price is also near the median line of the shorter-term ascending black channel that you can see, which is showing some signs of resistance. A bearish divergence is also forming on the RSI indicator. So after that record high that we saw, the price did ease back off slightly, with a lot of people mentioning the fact that Israel released a statement denying any involvement in that helicopter crash in Iran and perhaps easing up some of the concerns of further geopolitical tensions. A further reduction in those tensions, really that crash, may well deter the bulls from moving forwards. And it's interesting to note that oil did not react in the same way following the crash and surge. So it's the thought process that is now in the past. Now, given the above, we may see a new correction possibly to the lower boundary of the short-term channel in black, and if so, bears may find some support from that 2400 level that we've mentioned before. And in fact, this morning, Thursday the 23rd of May, the price is trading around the $2,368 per ounce mark, so below that 2400 resistance, which could well become key in the coming weeks. As ever, keep your ears and your eyes open. We know gold, a safe haven, can be significantly influenced by geopolitical concerns. So general news just as important as all the other market news that you're hearing. We wish you luck with your week ahead. Bye for now.